Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. In recent years, we've seen some really innovative ways to buy property or to release equity in a home. Today's guest has come up with another one. Midkey offers a product that unlocks equity in your home with no payments until the end of the loan. It's an interesting idea, and I want to look not just at Midkey, but why more people are turning to unusual ways to get into the property market or access their equity. Richard Young is the co-founder and co-CEO of Midkey. Richard, welcome to Fear and Greed.
Thanks very much, Sean. Great to be here.
So take me through the Midkey product, what you're doing.
Okay, the Midkey product can be a first or a second mortgage, but what it really does, it addresses loan serviceability issues where traditional forms of financing are unavailable to borrowers. And how does Midkey overcome that? Well, as mentioned, we are Australia's first no monthly payment home loan. That means we lend the money, and that when you either sell a property or sell the property or voluntary repay is when you make the repayments. So that enables us to be more flexible in situations where we can borrow. But most cases, all of the cases, is that the borrower will have significant equity in their homes, of which we can unlock a portion in there.
Okay, so you're going to have to unpack that a bit for me. Do you take equity in the home? So let's say I'm rolling off a variable rate mortgage and I'm going on to a much higher rate with bad terms and conditions. I want to do something different, but because of rates at the moment, it is a bit more difficult for me to get it from my current supplier in a competitive marketplace. So I go to Midkey. How does it work? Do you take an equity position in the house, or do you take your fee at the end of it? How does it work?
So, I mean, you raise a great topic now of the mortgage cliff. So what we do is if we provide, say, 10% of the value of the house in a Midkey loan, we'll take 10% of the upside. So $1 million house goes from 1 to 1.2 million. We'll get 10% of that upside, so 20% of the upside. If that house doesn't increase in value, we don't get a fee. So in addition to that, obviously, throughout the course of holding the Midkey loan, the borrower will accumulate simple interest on the loan we provide.
Yeah. Okay. And then they do have the option, though, to pay that loan off, though.
Yes, they do.
If they have a windfall or something like that.
Yeah, absolutely. So the wonderful thing about a Midkey is it puts the borrower back in charge. So as I mentioned, the borrower, when they sell the house, the Midkey will be repaid, or when they have a business success or are fortunate enough to get some money coming their way through an inheritance or other means, or frankly, their income recovers or gets larger, then they can refinance out the Midkey.
Okay. And where does Midkey get its finance from? Where's your funding come from?
Our funding comes from institutional investors.
Okay. So it might be a big super fund, or it might be a large high net wealth family or something like that who are providing the funds.
Yeah, a combination. Mostly at the moment, it's looking at offshore institutional investors.
Yeah. Okay. So the money comes in. That's it. So tell me, how big is the typical loan?
It's a great question. Early days, we think it's around 400,000 to 500,000 would be a typical loan for a Midkey.
Yeah.
But some of the loans early on have been significantly higher than that.
Okay. And is it the mortgage cliff that's providing you the opportunity, or the customers at the moment, or where are they coming from mostly?
It's a broad universe, actually, and some people are wanting to unlock equity to put into their businesses. Others want to complete home renovations that they haven't been able to complete and pay for. Others are, yes, in that situation where traditional interest rates have increased to a certain extent that they're unable to afford to repay them. So we're looking at situations where we're going to pay down a significant amount or all of certain first mortgages because of that issue. So it's a combination of people who are looking to expand their debt to do things like invest in their businesses, buy new property, etc., or, as I said, to consolidate debts or reduce those first mortgages and unlock more cash flow for their monthly expenses, which we all know have been rising.
Stay with me, Richard. We'll be back in a minute. I'm speaking to Richard Young, co-founder and co-CEO of Midkey. So I know your target, I've seen some paraphernalia and you're targeting midlife, which I presume people like me, middle of my life, is it simply because is it because I've built up equity in my home? Is it because that sort of 40, 50-year-old, more entrepreneurial? Why midlifers?
Well, we like the midlifers. I'm one of those as well, Sean. So, no, I think the addressable market, there is definitely people in their midlife have more accumulated, in most cases, equity in their homes. And we wanted to provide, we are the first provider of this sort of loan for the people in their midlife. And so we think it's a significant market opportunity, but it points to more that there's a lot of stuff that goes on in your midlife, ups and downs. And we think there's a good opportunity to help those people in their midlife with their challenges and also realise their goals, financial goals. But it is, to the point is, in theory, not in theory, in fact, we can actually lend to anyone who's over 18 as eligible and or anyone who's, older as well. But we're focused on the midlife people.
Okay. Now, we always tell listeners that they must read terms and conditions of anything that they're getting involved in, and this isn't an investment podcast. So keeping that all in mind, why is it that we're suddenly seeing so much more flexibility in the home lending market? And this is a great example. Until I was doing research on Midkey, I didn't know anything about that sort of product. I presume there's something overseas or something a bit similar, but we're just getting so much more flexibility in the market.
Well, I think, find a big problem and it's an opportunity for a creative solution, right? And it's a big problem. And as I mentioned at the start, this is driven by, quite rightly, the APRA regulations around loan serviceability for people's mortgages. So, and the values of people's houses have grown, but, their incomes haven't. So under the loan serviceability requirements, it created the need for the product. And I suppose we looked at it, we think there are other players, there are other sort of subsets, if you like, in this more innovative space. You might have deposit gap insurance, you might have shared equity solutions, you might have traditional reverse mortgages, you might have even sort of bridging finance, etc. And all of them serve all their purposes. But the interesting thing about Midkey is the way we're structured, it can serve most of those markets as well. But yeah, I think it comes back to the problem has become so large, and I think I love a challenge, and together with Scotty, my business partner, and we believe we've solved this problem.
Everyone loves a business partner called Scotty. Richard Young from Midkey. I suppose what I was leading with that question, the traditional financiers and the four big banks are the obvious ones in the mortgage market. They are a lot less flexible. Is Midkey and others, are they leading the way? So in 5, 10, 20 years, we're going to see more of this sort of stuff from bigger lenders or not?
Well, I think that all the banks, etc., we're regulated by ASIC, and the banks obviously APRA. APRA, quite rightly, we've had a great financial system in Australia, very stable because of those, if you like, guide rails that they've put in place. That would require changes to those guidelines. On the flip side, I think that, there'll be opportunities maybe for followers to come in off the back of what we're doing and others to grow in this space.
You're talking about midlifers. Richard, you worked at Macquarie for quite a few years and you've now gone and founded this. Do you like running I'm going to say mid-sized business, but, starting off as a small business, shall we say? Are you enjoying it, being out of corporate life and running your own business?
I absolutely loving it. I think, Macquarie is a fantastic institution, very entrepreneurial, and I enjoyed my time there. It was a fantastic time up in Asia, and I really love I think there's the opportunity commercially that we think is available to us, that we're prosecuting, but also, as I said, the ability, the societal opportunity to help people as well is really drives myself and Scott and our team, for that matter, to achieve not only the commercial success and help people with the loans, but the difference it makes to the lives of people in their midlife, and that's a major driver for us as well.
Richard, thank you for talking to Fear and Greed.
Thank you.
That was Richard Young, co-founder and co-CEO of Midkey, Midkey. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.